In this video, I will reveal a new, simple, easy tax saving system that we utilize with all of our clients in order to save them $10,000 in taxes minimum. Now, first things first is we're going to talk about this screenshot. This is a client we utilize and we inserted the system into his business, and now we're projected to save him $14,000 in taxes. That's a significant amount of money in my eyes, and we're going to go through all that today. Now, this system is called the MERNA framework. It's distinctly different from everything you see online saying you can write off this item, say and save a bunch of money, or you can spend the money to have a measly 20 cents on the dollar tax saving. You will be able to identify what you need to fix and be taking a deep dive into all that today. Now, the best part is that once you identify all of these problems and gaps within your business, you won't have to figure out all this stuff again in the future with your current business. Now, if you're going to be starting another business, hey, we might have to make an adjustment, but we can always do the same stuff that we implemented within the first business. Now, my name is Alan Pham, and I'm the founder of AP and Associates, where we help our coaches, content creators, and small business go from taxpayer to tax saver by leveraging the tax code to the fullest extent. Now, I've been in the finance space for over 4 years now and tax advising for over 16 months, licensed with the Main Street Business Certified Tax Advisor Program, KDA Inc. also. I help my clients know where they are financially and have saved clients up to $130,000 in taxes in a given year by utilizing this actual framework. Here's a screenshot of somebody that, we used to communicate with in 2017. We're still, we communicate here back and forth. And, being in the finance space, you talk to a lot of people early on and they have some good questions and you want to be in contact with them and keep them in your back pocket. So I'm kind of his Swiss Army knife, you could say. Now, in 2020, during the whole C word area, I'm not going to say it, I was able to increase my income significantly through a different finance business, aka credit. I ran into my first ever tax problem of what can I do to not write this check to Uncle Sam? Now, I did countless research and I interviewed multiple CPAs, but none of them were able to support me in the way that I was wanting, which is how can you help me lower my tax bill, right? All the CPAs I was speaking to wanted me to put a down payment on next year's tax preparation or pay $200 for monthly bookkeeping. And they even told me to make less money to pay less taxes. Make less money to pay less taxes. I don't think I want to do that. I don't think I want to make less money. We all have mouths to feed. And if, the tax problem is part of our expense, then we have to cut it. But if I don't have to cut that check, why would I not have to? Now, at the same time, going through all my problems, my clients had those exact same questions like, is this taxable? How do I structure my LLC? How do I pay my kids out of the S corporation? Hey, I have partners. How do we make sure that everybody gets paid? Or how do we make sure that the people that are investing into the business get paid first? Hey, I'm looking at potentially selling a business. What are some implications that I need to know with that? Now, due to high demand and my own curiosity, I scoured the internet and spent countless months, and I mean it, months, seeking the right tax help. Now, slowly over time, I was able to resolve my issues and help my clients do the same. Now, fast forward 4 years later, I've helped countless businesses save thousands from the IRS, all while being able to travel the world and learn about other countries' tax system. Right? I need the tax write-off, so I'm learning their system. Now, here's a screenshot of my one of my more recent trips to Dubai, UAE, United Arab Emirates. And, I got to learn a little bit about their tax system because I had clients that were interested in making the transition and buying property over there. So I might as well go learn a little bit about their tax system and, have some fun a little bit, right? Now, the truth is the economy today, it's pretty bad. We all know this. Inflation is causing everything to go up from the food, the furniture, electricity, vehicles, houses. Now, what makes you think taxes won't go up? Well, in 2027, we are already on the way there. Here's a screenshot of CBS. This was created in 2017, right around the Tax Cuts and Jobs Act. And, they gave us some tax cuts, but in 2027, that is all projected to disappear and those rates will be increasing. Now, what I can tell you is if you are a coach, content creator, small business, I can help you increase your net income. Yes, I guarantee it. I'm looking at you saying, I guarantee it. Your number one expense in life and business is taxes. If you can control and limit this expense, you don't have to drain more money on ads, hire more team members, pump out 100 pieces of content, or have some crazy guaranteed offer, which could lead to unsatisfied customers or clients. Now, getting the right tax help should not just be done from January to April 15th or waiting weeks on end to get a response from your tax professional after April 15th, hoping you don't have to pay extra taxes come April 15th, or go on a repayment plan with the IRS, or having penalties and interest tacked onto your bill, or apply tax savings strategies on your own and wonder if it's even legal, or following shorts, reels, TikTok for those type of tax advice, or being clueless where your business is financially. Now, here's a screenshot I've included from one of our current clients, and he said, my previous CPA told me you need to have more kids and withhold more taxes so you can pay less taxes in April. For me personally, I don't like any of these strategies. Now, if you do, I mean, hey, two free strategies for you guys right there. But having more kids, it seems not very cost effective. And if you are not having kids for the purpose of potentially building your future, then, that's a whole different conversation. And withholding more taxes so you can pay less taxes in April, it seems essentially like a wash. Hey, like we're going to just pay the tax up front and pay less down the line. Now that could be a strategy if if you think that, it's patriotic to pay your taxes, this could be something that it applies to you. But a lot of times business owners, they don't want to write that check if they don't have to, especially with all these other influencers that, are not having to do it. We can see it. Now, I know all of this is because I used to be there. This was the old way to save on taxes. Now, we've created a seamless journey after countless consults with tax attorneys, enrolled agents, big shot tax professionals that have saved their clients money over and over again every single year. The solution doesn't require you to be a millionaire to get access to this type of information. Read, the entire 80,000 plus pages of the tax code, or say you reported all of your income already. I know some of you guys are doing that, but we got to stop that. Now, the solution is the MERNA framework. We're going to get straight right into it. This new tax saving system in today's high inflation market, it works. Since I've applied this into all my clients' business, we have been easily able to identify what type of tax savings there are and what is missed. Last note before I get into everything is a disclaimer is I am a tax professional, but I am not your tax professional. Please consult with your tax professional before moving forward with anything in this video. None of this information is legal or financial advice, but more for education and entertainment purposes only. The first M in MERNA is maximizing your expenses. Today, I want to teach you guys about a very important tax code every coach, content creator, small business needs to know. Yes, we are learning about tax code to understand their loopholes and take advantage of it. Code section 162A simply states that any expense that is reasonable, ordinary, necessary in the pursuit of income can and will be a deduction. Now, here's a screenshot of actual Cornell terminology with ordinary, reasonable, and necessary in the pursuit of income. This is their definition straight from the book. I'm not making this up. But why is this important in maximizing our deductions? Well, a lot of the times, a lot of clients are utilizing their personal items within their life, and they're also utilizing in their business life. So how can we convert the personal items to business and get those deductions within our business? Well, it's important that you understand especially why ordinary, reasonable, and necessary, what they mean. Now, ordinary meaning I see others in my field and space utilizing this in the pursuit of income. This is one step closer to getting a write-off. Now, two, right, is it reasonable? We don't want to spend an insane amount of money for a product or service This is another step in the right direction. And lastly, is this purchase necessary for my business? Will income come from this outcome? Obviously, you making the purchase. Now, quick example, right? Traveling. Like I mentioned earlier, when I traveled to another part of the world, learning their tax system and gearing it towards my clients, do you think that is ordinary? People are traveling to other parts of the world. Hey, we have clients that are making the move, so why not understand their tax system and learn directly from business owners or tax lawyers that are in that country? Is that ordinary? Seems like it's ordinary to me. Reasonable, right? Traveling, if you're traveling and maybe the flight is $1,000, hey, that makes sense. Going from America to a whole different country, that makes sense when you're traveling. Now, is it going to make sense if we potentially book a private jet and make that expense? Probably not. It's going to be around $20,000 and up. Now, if you have very high net worth clients, maybe it makes sense. But for me personally, I'm not having those type of clients yet where they're making a couple $1 billion in their business. So it might make sense to just pay $1,000 for a flight. Lastly, is this necessary? Is it necessary because potentially a client is looking to move as soon as possible for legal reason matters? The traveling. Hey, if I travel, as soon as possible, will this be necessary? Then, if you can say all three of those things, you can say all yes to all three, then it's most likely a deduction and can decrease the amount of money you owe in taxes. Next is entity structuring. This starts to be a little fun. Now, my number one question I've received in all my consults is, should I make an LLC? It's a very, beginner type of question, but it's also a very important type of question because we want that asset protection, right? Well, short answer is I don't know. This is dependent on you and your goals. Now, like I said earlier, do you want to be protected from a lawsuit inside the LLC or the business? If yes, then yeah, we might want to go ahead and make it. Now, is it cost effective? That depends. I want everyone to make money, but also not waste money creating a bunch of LLCs for these business ideas that are creating no income, right? I've seen clients make 4 different LLCs for all their business ideas. Only one took off, but hey, the other 3, I'm still working on them. Let's prove the concept. Let's get income coming in, and then we can, make that asset protection come to life. Now, the real question I know everyone wants to ask is, will an LLC help me save on taxes? And simply stated, no, you never will, because if anything, you're going to have to pay more taxes, 15.3% more to be exact. And even if you are a sole proprietorship, you will have to pay that 15.3%. This tax is called the self-employment tax. Now, if there's anything you take away from today, I want you to understand that there is an even better entity for you if you are making above 50,000. I typically recommend this when you're making above 75,000, but 50,000 is just fine if you're doing everything yourself. That entity is the S corporation. And the reason I tell you this is because the S corporation can limit the amount of self-employment taxes you pay. Most people will look at this as the holy grail. And I completely understand, because if we're getting to save 15.3% on $50,000 in income, I'm all for it, right? I know you will be too. Now, one of the many requirements to keeping your S corporation good standing is determining reasonable compensation, right? Listen, not right. Everybody's situation is unique, and I'm going to give you an example, and please take this for a grain of salt. This is very unique, okay? If your business made a net profit of 75,000 and you were an LLC, you would have to pay roughly $11,475 in self-employment tax. Simply, right? We're doing simple math, 75,000, the net profit times the self-employment tax. Hey, we're looking at this self-employment tax straight to the IRS. That money will not come back. Now, for the S corporation, if you had a net profit of 75,000 and we determined that reasonable compensation for you was 37,500, you would have to roughly pay 5,737.50 on self-employment taxes. Again, we determined that half of that amount is reasonable compensation, so we're just going to take half, multiply by 15.3, and that's how we determine the self-employment tax you have to pay. Again, this is an example with rough numbers because we aren't including the federal taxes. And then if you live in a state that has state taxes, I live in Texas, so I won't have to worry about that. But, if you live in California, we might have to factor in those type of state taxes, QBI or anything like that. But holy, 5,737.50 in savings just by determining what type of tax entity you should be in. All this sounds like a plan to me, and this is something I would definitely consider. Again, everyone's situation is unique, and the S corporation could make sense, and it might not, even though you are making above 75,000. Please consult with your tax professional. Okay. Here's a example of someone we utilize with that, whole changing their whole entity. They went from owing 173,000 to getting a refund of 23,000. Now there were additional tax strategy utilized, but the main thing for them was we changed their entity and it completely changed their whole tax liability. Now this is something that is very unique. Again, it's very unique. Please consult with your tax professional. R is retirement. In my opinion, this is something that I see a lot of the younger generation pushing down the line and not setting aside anything for themselves in the future. Now, here is a article by CNBS, CNBC is 44% of Americans can't pay an unexpected $1,000 expense from savings. We're just not wired to save, experts say. If you can't set aside, it's I understand the economy, it's very hard right now, but setting yourself up for the future, whether, just setting aside a couple $100 a month, this is very important that we're saving something for ourselves because we might need that in case of an emergency. And right here, you can't even, people aren't, like I said, setting anything aside for the future, especially if they don't have anything today or in their retirement accounts. When you hit that age 60 or whenever you decide to retire and there's no money inside of it and you are just depending on Social Security, it's going to be very difficult for you to live on and not have to get back into the workforce. Now, retirement is important and there are so many different vehicles that you can choose from. I am fathomed by, talking to our older clients that are 55 and, they're right at the age where, hey, I'm looking at retirement and they have essentially like a gun in a barrel looking at them. I don't have any money saved up. What can I do? I have a couple thousand in, my Roth, traditional, whatnot. What do I need to do? Right. So I'm just going to tell you guys about the different vehicles you guys can utilize. Now, there's the 401k. This is typically company sponsored. And then there's also your IRAs, which is your individual retirement accounts. These are things that you set up aside from the company. Now, I have it right here where traditional means that you get a tax deduction on the way in. It grows tax deferred, but then when you retire and pull out that money, it gets taxed at the end. Now, typically traditionals are your 401ks, your IRAs, but then if we're looking at Roth accounts are contributed with after tax dollars, meaning you already pay the tax, it grows tax free, and the withdrawals are also tax free. So everything that is Roth 401k, so Roth company sponsor plans or Roth individual retirement accounts, those are the ones that you can pull out tax free. There's also your 529s, Coverdales for the education. And then the cool part of all these accounts, and what I think most people are brainwashed and what Wall Street has brainwashed people to do is, hey, I can only invest my retirement accounts into the stock market. And I can tell you guys today, that is not the case, right? You can self-direct your accounts. Now, if you go to any Merrill Lynch, Fidelity, and you ask them, can I self-direct? And they're not going to let you know about that because essentially that means that they're washing and they're giving away the business into, obviously the Wall Street, the big markets or whatnot. They're giving that business away. Those type of people will never move up within Merrill Lynch, Fidelity, and those type of companies. So self-directing, if you guys are hearing about this the first time, self-directing, I can tell you right now that I can't tell you what to invest in, but I can always help you choose the right vehicle. Self-directing is like driving the vehicle yourself. It's pretty cool. Once you understand self-directing, and I could just give you a quick example, maybe, hey, crypto is, you have a lot of conviction within crypto and you want to invest it. Why not invest it with your Roth IRAs, right? That is what you're able to utilize by self-directing, rather than just the stock market. Hey, maybe you don't have a lot of conviction, or you're bullish on the stock market and you're more bullish on potentially crypto and even real estate, right? I want to buy real estate within my retirement accounts and own some real estate, let it grow. And then when I sell it, that capital gains part that, accumulates over time, the next 30 years, depending on when you're going to retire, that could be potentially tax free. Those are things that you can utilize with self-directing. You can buy real estate purchase contracts. You can invest into cows. That's insane, right? Like I was talking to a tax lawyer and he telling me, hey, he uses his HSA to invest into cows. Now that's obviously not your retirement vehicles, but that's still essentially a tax deferred and then tax free withdrawal type of account. Now those are some of just the things that you can utilize. You can invest in solar. You can invest into private businesses by self-directing, meaning you can be like Peter Thiel and invest into Facebook early on, and have a big Roth type of account, big account for the time he retires. You can do things like that. You can invest into private companies, or you can just continue to invest into the stock market. That's completely fine. There's nothing wrong with that. That's the R. Now, the N in MERNA is niche activity. Now, everyone's got a different business, and your niche most likely won't have the same strategies as another niche. Coaches, content creators is not going to have the same write-offs as a restaurant business, right? Content, unless you're making food and whatnot. But hey, traditionally food, like a restaurant, you're going in, sitting down, you're not going to have the same write-offs as a person that is creating content online. These are two different types of businesses, unless obviously the restaurant owner is a content creator or generating some revenue from that also. It gets a little tricky, but I think you get the point. Now, the best way to identify niche strategies is to ask others within your industry. What are you already doing to additionally save money on taxes? This is so, you know, flown over people's head because they think that, they can only talk to tax professionals. And hey, because somebody is a content creator, they're already most likely, and they're successful, they're already most likely implementing some sort of tax strategy or getting organized within their business finance wise. You can ask them. It doesn't hurt. Where the worst thing they can say is no, right? But that's something that I don't see a lot of other people, coaches, content creators are talking about. The finance part specifically, they're always talking about how to grow the business, and there's nothing wrong with that. But at the end of the day, cash flow is king. That's how we stay in business. If there's no money coming in, you know, then we're going to be out of business. And then at the end of the year, if you can't stay, within regulation and pay your taxes, then you've got another problem coming for you very soon. Now, I will give you one strategy that I see most coaches and content creators forget, and that is equipment. Equipments can vary from camera, your microphone, the widescreen monitor, the laptop, all this, this equipment can be your highest expense. And when you purchase it, it can and when you purchase it, can drastically change the tax savings you get. So we're just gonna watch this video real quick that I made recently. If you're a coach or content creator, you can save thousands of dollars in taxes by doing some simple tax planning for yourself. I'm gonna show you guys in 60 seconds by what I mean. Let's get to it. Let's say you've got a bunch of equipment for your business, like a laptop, a computer, a widescreen monitor, camera, lens, microphone, all that stuff, and you're deciding whether you should purchase it this year or next year. Let's say this year your business is doing 125,000 in profit, but next year you've already got a bunch of brand deals coming in. You have clients that are coming in. You're going to be making $200,000. That's a lot of money, more money for us, right? But wait, all that money has to be taxed. And when you're making 125,000, you're going to be taxed at 24%. And then when you're making 200,000, you're going to be taxed at 32%. That silent business partner is pushing us into a deeper and higher tax bracket. And since you are purchasing these equipments as a write-off inside your business, this is how you determine the tax savings you get from being able to purchase those equipment. So you're going to take the total equipment purchases and multiply it by the tax rate. Same thing right here. So for this one, we are going to get a 3120 savings if we take 13 times 0.24. And then if we are going to take 13,000 times 32%, we're looking at 4160 for tax savings. Huge difference inside of you deciding which year to buy because you are making a certain amount of income during that year. This is one of the many tax saving strategies we utilize with our coaches and content creators. So if you're looking real quick, that is just a small example and small taste of being able to work with a tax professional that understands coaches and content creators. And it's important to consider the timing of your purchase, but also what type of income we can get a write off and make that go away. Allow me to explain. Now, most content creators and coaches start, their business by having a job at the same time, which is completely fine. But let's say in 2024, you are a part-time worker and a part-time content creator. Business is doing well, and you decided to make the decision that in 2025, you're going to quit your job and go full time with a content creation business. It might make more sense to purchase the equipment in 2025 because not only potentially does your income increase, but you can get a write off on your content creation business, thus avoiding the self employment tax of 15.3%. When you have a job, you're typically subject to half of that self employment tax because your employer is paying the other half. But when you are your own business, you are subject to all that 15.3%. Now, even though, again, you had a job and obviously you can't get the write off for that, but the equipment purchase in 2025 could save you way more money from paying self employment taxes. And that is something that you guys, I heavily advise that you guys consider. Here's an example of a client that, you know, he owed about $348,000 in taxes. And then because we were able to write off his equipment a certain way, we're able to save him roughly $130,000 in taxes and cut his tax bill down to $217,000. Now that's still a significant amount of money, but he was able to utilize and maximize his deductions from his equipment purchases and able to lower it significantly. My last and favorite one is advanced strategy. Now, you might come to this video and watch this, and you've already converted all your personal items to business. You've already done the whole S Corp thing, already contributed to your retirement accounts, and even taken advantage of all the equipment deductions, or you haven't done any of those. That's completely fine. Now, advanced strategies typically require more help and guidance from tax professionals that have already done this type of planning before. This would include buying real estate, utilizing a board, putting kids on payroll, setting up a foundation, oil and drill investments, C corporations, charitable trusts, offshore accounts, and all the other 30 advanced tax strategies within our business. There are so many, but today I want to talk about real estate, the fun and exciting strategy that all my clients want to get into and desperately need help. And I'm not talking about buying a house and just writing off the mortgage interest. No. Here's an example of a client that, brought a property in California and his projected tax savings, he's going to get a refund of $40,000 because he's utilizing real estate. Now, the alternative is, hey, well, he probably had to put up money to buy the property, but at the same time, he's also getting a $40,000 refund given back to him. And in my eyes, if you're just, handling your business, you're paying your taxes, that money is gone. Why not put that money into real estate and get that refund back? So it's essentially a wash, but hey, at least you know where that money is and you have control of it in a certain way. This is why real estate is so savvy. Now, that isn't a big enough deduction. I'm talking about qualifying for real estate professional status, kind of like how Donald Trump did before becoming president and hardly paying any type of taxes. This requires you to participate in managing the property for a certain amount of time, allowing all the losses of the building, aka depreciation, flow into your business income, potentially your spouse's income, your crypto stock income, and get that close to as zero as possible in taxes owed. Yes, this is completely legal. And if you can't qualify for real estate professional status, we can always discuss further about the short-term rental loophole where there's less requirements so that you can still have all that depreciation flow onto your business income, your W-2 income, potentially your spouse, your crypto, stock, and get it to close to zero as possible in taxes owed. This is why real estate is so sexy. Now, you obviously, when you purchase a property, you get the appreciation from the building over time. You also get the mortgage reduction from the tenants paying it down, allowing you to build equity You get cash flow depending on how you're able to work that out with your tenant. And then the last thing is you get the tax benefits. You can do all four and build wealth at the same time. Now, we went through a lot, and honestly, this is just the tip of the iceberg. I'm sure you guys took a lot of good notes and thought this was good information, but I want you to know that you need to go apply this information. I can guarantee you that you will not save money if you decide to do absolutely nothing. You might even end up paying more, which is fine by me. I don't want you guys to push this down the line to next year again and having this whole same situation, same problem that you're going through again because you probably Google search how do I pay less in taxes? This potentially came up and we're at the later end of the year and you want to apply all the strategies, but it might not make sense for you, because you got stuff going on in business, and then you do this the whole thing again next year. I don't want you guys to do this. Yeah, like I said, I guarantee you won't save money if you're not going to be applying anything. Now, that's why today, for the first time ever, we are offering to guide and implement you through the MERNA framework. If you've already heard enough and want to take advantage of this unique opportunity, I recommend going down below and booking a call to speak with me or my team now. We're looking for a beta group of coaches, content creators, small businesses who want to work with us and one-on-one and build the MERNA framework personalized tax plan in their live business in 45 days or less. We are not trying to sell everyone on this. We've already validated the concept with our current clients and want to test it to a wider market. So you have no risk by simply booking a call, speaking with me or my team about utilizing the MERNA framework. And for those that need information, allow me to explain a little more in how I came about this framework. This framework is extremely organized and will allow you to maximize what you are already doing and guide you further in being able to take advantage of the tax code based on your situation. After all, the tax code itself is 80,000 pages and it continues to grow every single year. And whether there is a new professional or new president coming into office, there's going to be potential more pages added to the tax code. Not everyone has the time to read this, but what I've gathered is all wealthy business owners right now are doing the same thing, from Jeff Bezos, Elon Musk, Donald Trump, Mark Cuban, Robert Kiyosaki. I've had multiple tax attorneys and professionals even confirm this framework that have been in business for over 20 years. Here's another tax professional that I've been able to work with, and he's able to share this type of information and apply with his tax clients and saving them millions of dollars in taxes. Yes, an individual client saving millions of dollars in taxes. Now, as we go through time, I am certain that there will be changes to the law and we must adapt to this. I'm certain you learned something new, but will you be able to apply all of these strategies in confidence? Most people coming in looking for mentorship and help with lowering their tax liability. I know we can help with this. Our goal is to get you to save as much money as possible with zero mistakes. I would hate for you to move forward with doing everything yourself and then there is a slight mistake. And we all know what happens when there are mistakes are made. There's always someone waiting on the other side, and that's the IRS. This type of information may not be readily available to your current tax preparer. This could be something they do not do, may not be aware of, or have the time expertise into diving this situation. Now, this is not every tax preparer. This is just some of them. Now, compared to the work that I do with my clients throughout the next 365 days and have constant communication, in order to maintain my certification, I have to attend weekly live trainings and updates to upkeep my certification with the tax law. This is essentially my secret weapon into staying savvy with the new tax laws and updates. They're interpreting the tax laws for me and giving me the information. And I'm also taking like the same time to make sure that, hey, maybe this is something, we should consider a different perspective. We also deliver a tax plan to you in order to know what taxes we have to pay at the end of the year and what is exactly needed in order to bring that down to as much zero as possible. This is how we save money in taxes. You will be ahead of the curve. This is also not just a course. This would be impossible to make into a course and help everyone with their unique situation. We have clients all across the US. Some people are married, some are single, some are looking to get married. Some clients have kids, some don't have kids, some are looking to open a business, some are looking to open multiple businesses, some are veterans, some are looking to sell their business, some people are looking to get into real estate syndications, maybe utilizing their Roth and getting into those type of investments. There are just so many variables. Making all this into a course would simply take a lot of time and also on your end to watch through every single video to look for your answers. Or you can work with a tax professional and give you the answers you need. I want to help you control and minimize this tax problem so that you can focus on the business and grow that into the empire you wish it to be. If you're ready to jump on this one of a kind opportunity, please don't hesitate to make your move and book a call with myself or my team. We're looking for a beta group of coaches, content creators, or small businesses who want to work with us one on one to build the MERNA framework and personalize a tax plan in their life business in 45 days. We are not hard selling anyone, and we only want people who see the value in the MERNA framework and build a personalized tax plan. Please book a call with us now. So there's absolutely no risk. So with simply setting up a call and talking to us so that we can tailor all of this for you. For those that are interested but still have questions, let me address a few concerns that you might have around the MERNA framework or creating a tax plan for you. Is this legal? Short answer is yes. Everything that we do is provided with the IRS code section. You are more than willing to confirm this information. The sections may be difficult for you to understand. So the IRS also releases publications for ease in reading and understanding. IRS publications are exactly what the IRS auditors utilize when they are auditing, and it is accessible to you. Now, is this patriotic? I believe that not paying taxes is patriotic. Some will argue this, but the government has created laws and code sections to help guide Americans into paying the least amount of taxes if they follow all the rules and requirements. So, why do you think all the rich people barely pay any taxes and hide their money inside of real estate? Why doesn't my CPA do any of this? Well, your CPA might not want to do this type of work, or they might not have the time to research and interpret the tax code. They could just be filing your taxes from January to April 15th as extra side money. There's nothing wrong with this. But if you are curious as to why your tax professional has not told you any of this, it may be time to upgrade your tax profession. Can't I just keep doing what I'm doing? Yes, if whatever you're doing is working to save on taxes, then by all means, just keep on doing it. The beauty of the Marna framework is that you can continue to work with what you're already doing and potentially save even more taxes and also help you build wealth at the same time. So, with all that being said, we formally invite you to book a call with myself or the team to help build out your Myrna framework and tax game plan today. We are only working with a handful of coaches, content creators, small business owners making above 50,000 and understand that if they can limit their number one expense, which is taxes, your business can make more money without changing the business model at all. I'll spend the rest of my time here explaining how the process works, how quickly you can start seeing results, and what you'll get from working with us. First of all, I cannot stress this enough. The information we went through today is not the only thing you need in order to save money in taxes. It's really a system. Everything works together and allows us to exactly identify what you are missing out on and grab that money back. Second, this is not a course that you can just keep pushing down the road and wait till next year to figure it out. We take pride in communicating with all of our clients through the next 365 days. Yes, send us a message through our private messaging platform, Lark. That is similar to Slack, and you'll get an answer within 1 minute to 24 hours. Before any of this, we actually want to take a deep dive into your previous year's tax return, specifically the last 3 years. The reason we do this is because the IRS allows you to go back up to 3 years in the previous years and file an amended return. So we look over your return and determine that if you left money on the table, I want us to go back and grab that money. Here's a client that he came to us, and then within 2 weeks, we identified that he should be able, and he was able to get a $4,000 refund just because his previous tax professional did miss out on some deductions and put in some of the things incorrectly. And he had a bunch of business expenses that were coming up, and he was able to walk away with $150 in profit, and all that refund covered the business expenses for him. And this for him, you can see that he is happy with those numbers, and he's truly grateful for working with us. After we analyze your previous returns, we will identify what your tax liability is today and the projected total liability on December 31st. Yes, we will run the math and scenarios you are going through to determine that number. Once we have that number, we will at least have a good understanding of total taxes you are projected to pay in the year. And now we can start strategizing. We want to know your personal goals and business goals. We aren't going to put a plan for you with our goals. We want to know your goals. This is extremely important and the foundation to having you pay as minimal taxes as possible. If you allow us to, we'd like to talk about your retirement plan and if real estate is something you should or want to consider. These are the vehicles we are utilizing to build wealth and pay as minimal as taxes as possible. Up to this point, we are sitting on a lot of information. This is where me and my team will put together a master plan in combination with the MERNA framework from your previous tax returns, your personal goals, your business goals, your retirement goals, and even your real estate goals. We will then present you with our recommended strategies to push your tax liability as close to a zero as possible. In the strategies, we will have them listed out one by one. We will label the day we recommend you to move forward, the impact on your situation, the opportunities, the downfalls, key metrics we need to consider, and what type of tax savings there will be. Not only this, but we want to be with you for every step of the way and implement the strategies. This is our best work, and this is exactly how you will be able to see that tax bill shrink. Every single client's implementation is unique and different. I have personally spent over 30,000 in tax training, hourly consults with tax lawyers, long nights reading the tax code on my own time, and made the early mistakes of overpaying taxes in my own business previously. You won't have to experience any of that. We will work and help you build and implement the tax plan. Go grab that money back on the table if you left money in the previous years. Formulate your entities, manage your books, and if you allow us to, with the least amount of headache or complexity. We consider ourselves a non-equity partner where we treat your business as if it was our own. If financial emergencies arise or you have any pressing questions that require immediate answers, we have your back. You will have access to me and the team. Your goals become our goals. Your challenges become our challenges. Our job is to help you solve those tax financial challenges using our proven battle tested systems. There's no additional cost to this, no equity you have to give to us, or no nagging monthly retainer. The only catch is due to the done for you work we have to do and the intimate one-on-one support we provide. We can only work with a certain amount of clients a month. And we only work with coaches, content creators, or small businesses making at least $5,000 a month. So if that's you, I invite you to go below this video and book a call, learn more about how we can help you lower your tax liability and build wealth at the same time. While booking your call, you'll fill out a few questions that will allow us to come prepared to our call with the next steps to help you in your business. If you're tired of paying the IRS and want to lower that money you send off every single April, go below this video, book the call to speak with our team. Again, we can only work with a limited number of new clients a month, so don't wait.